Hello and welcome to the show today. I'm really glad you could join us. So today we're talking about something that's really important and can cost you a lot of money if you don't do it the right way, which is your payroll. And we're going to talk about a lot of changes that are happening in that industry, even pre and during COVID, things you need to know and things you need to know to make sure that you are spending as little as you possibly can, but getting the maximum return. And with us today is one of the foremost experts in this space, Matt Kopko. Now, Matt is DailyPay's Vice President of Public Policy, where he manages their interactions with regulators, legislators, other government officials, and stakeholders. Now, Matt was drawn to DailyPay because he has a passion for focusing on emerging technologies that help improve the lives of millions of working individuals. Now, prior to his role at DailyPay, Matt served in a similar role at Bird, the micromobility company. Now, Matt also has a senior government official and member of the Senior Executive Service, as well as an attorney in private practice. Now, he holds a bachelor's degree from Princeton University and a JD MBA from the University of Chicago. Matt, thanks for joining us today.
Great to be here, Ty.
I'm really excited you could be here because it seems like a lot of stuff's happening right now in your industry. So through COVID, kind of what are you seeing? How is like payroll and how payroll is handled kind of changed over the last couple of years?
Sure. Yeah. So great to be here, and thanks for having me. One thing that we've seen, DailyPay is a service provider in a space that we call on-demand pay, which is a new technology that helps employees get paid whenever works for their schedule, as opposed to their employer's scheduled payday. And the coronavirus pandemic kind of really uncovered, a bit of a hole in how we treat our workers. A lot of people aren't aware that 2 and 3 hourly workers are paid just once or twice a month by their employer. So that's the kind of biweekly, semi-monthly, or monthly pay cycle. So imagine, a lot of people are going through life like this still, where you work a shift or a week and up to 5 weeks later, you get paid for it. On its own, that is its own curious artifact of history and a little crazy to think nowadays that that's how we pay people. And then, especially in a world of instant payments and instant everything like Venmo, again, why are we waiting weeks at a time? Now, there's all that background that was pre-coronavirus, and then coronavirus came and kind of created a bit of a whirlwind and shone an even more of a spotlight on this. The difference, we're not even just talking about weeks anymore, we're talking about days now, right? So the difference between getting paid on a Tuesday versus a Friday, when we have these, very disruptive time periods, like we did in early and mid 2020, for example, is the difference between having hand sanitizer available to you, having Lysol wipes available to you, or having to wait 3 hours in line at a Walmart to even get into the store. I live down the street from a Walmart here, and I remember during April and May, just lines out to the highway almost, for people just waiting to buy some of these basic needs and supplies. And so DailyPay is this technology that integrates with employers to say, hey, you employee, you should be in charge of your pay experience. We have the technology and data and capability to verify your pay and how much you worked even yesterday or the day before. So we know on a day by day, on a net basis, what your take home pay would be. So aside from accounting convenience and employer payroll HR practices, why shouldn't you be able to get paid your own money whenever you need it? And so our technology works with employers to enable this as an employee benefit to employees. So if you're someone in one of these types of situations and you have worked 2/3 of a shift, but payday isn't Friday and it's Tuesday, and you need either food for your family or you need gas for your car, or you heard that a store nearby has just recently restocked with hand sanitizer or things like that, you can access a service like DailyPay, and for the price of just $1.99 or $2.99 if you need it instantly, literally within 20 minutes, we facilitate the transfer of your own earned pay directly to you. So it's not a loan, it's not anything like providing you money that you haven't yet earned. It's your own money you've already earned to date in the shift. And the idea is saying, why do we queue that all up and pay you once or twice a month, weeks from now for it? Why can't you be able to, get paid as you earn? And for some people, it's a very valuable benefit because they have tough times and they're living paycheck to paycheck. And for other people, they just like it as a nice backup kind of emergency plan if they ever have an unexpected financial emergency. But coronavirus really shone a light on this, that it wasn't just kind of a nice to have, it's more of a need to have in terms of just the basic right of flexibility. And, we serve millions of workers in tons of industries, including frontline industries, from hospitals to grocery stores to retail outlets that have had to keep this economy humming. And the idea that we can be here as a service to prevent those folks who are, serving on the front lines to keep America going, to keep them from having to take out a payday loan or pay those $35 bank charges because their paycheck hasn't hit yet, but they had a bill come due, is really just a very gratifying space to be in as a company. And part of why it's so attractive and has been growing so fast is because I think the world has finally realized, like, the accounting systems of the 1900s need to be left in the dustbin of history, and we can get paid more frequently without any additional compliance burden on the employer. And this creates meaningful value for the employer and the employee. And the coronavirus really kind of, it was a moment where the light was shown on this. And we've had, I mean, some of the largest companies in the country, in the world, Target Corporation, Kroger, the nationwide grocery chain, accelerated nationwide implementation of DailyPay in the midst of the coronavirus pandemic, because they said our workers who are, keeping stores stocked and keeping groceries going for people, they need to be able to have this pay flexibility. So it's been really, amazing to see throughout 2020 how this has kind of changed the landscape.
Yeah, it's a brilliant concept. So with on-demand pay, how does it work? Do they still get typical biweekly paychecks? They just have the ability to get the money sooner than that if they need to? Or is it fundamental shift where there's no more biweekly pay? They're just getting the money whenever they want to get paid.
Yeah, so it's a bit of both. Essentially, imagine it as a technology layer that sits on top of the existing employer systems. So again, we don't do any marketing direct to consumers, and none of this has to do with money you haven't yet earned. It's all entirely the verified money you've earned. So just to give you the kind of 30-second breakdown of how the business model works, and I think that'll answer your question, is we sell directly to employers. So they're our main clients, and their employees are obviously the users of our platform. But we sell this to employers so that we can integrate their time and attendance data, your time clock data, your payroll system, and your accounting election system. So we can calculate kind of from a big data, big cloud algorithmic standpoint, what your net earned pay, take home pay would have been yesterday had your employer run payroll. And so what we do is we make that balance available to you, almost like in an app where you're looking at your bank account balance. So every day you work, your balance grows. And at the touch of a button, first of all, you can just go through your entire pay period saying, this is so helpful information, right? I used to just get a black box paycheck every 2 weeks. And I had no idea, how it all nets out and all that. I know yesterday I actually earned net take home pay, $132. Like, that's just valuable for me from a budgeting standpoint. Or critically, with the touch of a button, you can say, I want to access my balance like an ATM. I already earned this. I want it now. I have a need. I have a bill come due. I need to go get groceries. I need gas money or whatever it is. And it's my money in the first place. So let me access it. And then DailyPay handles the rest, so that, on your next scheduled payday, you get exactly what you would have gotten without DailyPay minus that amount that you had requested early. And so DailyPay handles all that. So you can go through a pay period, just get paid normal course every 2 weeks or 4 weeks as you did before without paying a penny, or just as needed on an on-demand basis, hence the phrase on-demand pay. You can pay $1.99 or $2.99 to be able to access your pay, depending on the financial network and the speed you need it. So it's kind of more the former, where it's the biweekly pay schedule exists, and we can talk about why that is. It's kind of critical from an employer standpoint to not have to overhaul other payroll systems, because that's part of why this has been able to spread so rapidly, is we've done it by respecting the existing employer system. So what we tell employers is, do everything the way you used to before, we handle the rest. And then employees have this voluntary optional benefit whenever they need it as a safety net.
So they're still getting paid biweekly, and then they have access to this Paycheck ATM. I don't know if that's the proper.
We call it our PayTM sometimes. So you picked up exactly on the concept.
Okay, perfect. Okay, so we've got the ATM, and then that gives them the ability to pull money out sooner that they've already earned in the interim if need be. So they still keep their normal pay, but then they have this, this Pay ATM access in between in the cases that they may need it.
Exactly. It's you at all points in time. Remember, in every, it's universally accepted and unquestioned that if you quit or are fired from your job, from that shift to date, that's all your money you've already earned. And actually, in some states, the law states that it must be paid to you immediately. So just imagine extending that concept to say, well, why can't I always get paid immediately whenever I need to? And so that's where DailyPay came in to say, this idea of having the flexibility to get your own money that you've already earned quicker and faster, or whenever you need it, is kind of a basic right. And so it's kind of part of, it's clicked in people's heads to say, once you have access to a service like this, you kind of realize, like, man, this is the way the future was supposed to be. I don't get why we were doing it before, where I had to wait 3 weeks at a time and borrow money from friends for gas, or that, sweating those last 3 or 4 days before a paycheck is just, horribly depressing sometimes for people who are in tough financial straits. And so anything
Sure.
we can
And a
do to
lot
help
of
alleviate
places
that
go
burden.
to very, very high cost, type of places like Amscot, et cetera, where they're paying outrageous interest rates just to be able to borrow the money they need to get themselves up to through their next paycheck.
Exactly. So one thing that we like to say is, there is a whole regulatory component, and there are a lot of people who have taken on as a policy priority to either rein in or regulate payday lending. That is not our battle to fight. What we are doing is using the free market system and competition and technology to provide just a better experience and alternative for people so that they never have to turn to a payday loan in the first place. So it's kind of more the carrot than the stick, which is let's provide some, we can understand why people need to take out a payday loan. Let's understand that. Let's provide them a better option. And so, a lot of people don't realize, as you hit on there, how dangerous and damaging the payday loan cycle can be for someone. So, your average payday loan is about $375. You're looking at a study by the Pew Research Group has done a lot of research on this. And it's on average rolled over 8 times because that's the way kind of the industry is built to rely on those rollovers. And so your average $375 payday loan, you end up typically paying about $520 or $500 or so in interest alone just to close that up, because on the average they're rolled over 8 times. So the pitch from DailyPay is very simple, and people who've ever experienced a payday loan, they don't even need the pitch, right? The idea is, imagine turning all those hundreds of dollars, putting them back in your pocket, and for the price of $1.99, never having to do that in the first place.
Yeah, I mean, it's powerful. And I remember the past, like I've relied on payday loans back in the day from time to time. And I remember how outrageous they are. And that rollover, what's happening is you're pulling the money out, from your pay, and then you get your pay it. And then the interest is so high that it just continues.
Exactly.
But it does bring up a good point. Do you guys have any of that problem with rollover here? Because the interest is gone. You don't pay 500 and something insane amount of interest on $375 in that example, but people are pulling money from their payroll early. So have you found, with all the data you guys are collecting, does that create any kind of con? Is that kind of any kind of problem where then those people are then rolling over because they don't have their full paycheck on payday?
Yeah, so that's something obviously, very near and dear to what we think about every day, because, we don't want to replace a cycle of debt with any other negative cycle. Of course, this is not debt, so at least that problem is solved. But you raise a much bigger point, which is how do people interact with the service? So one thing that we did was we did an in-depth study of our users on this specific point, right? We went to them and asked them, before and after DailyPay, how much were you relying on payday loans, overdraft fees, and late fees, and now how much do you do it now? And as you can imagine, just shocking reduction in reliance. And then separately, we asked them, does having access to a service like DailyPay make you more or less able to make those large monthly payments, like your auto payment, your rent check, your utilities, sure, right? Because the idea, as you're alluding to, is, if people aren't, analyzing or interacting with the service properly, they could be in a situation where they take out money, didn't really kind of put all the math together, and then when their paycheck arrives on payday, they say, uh-oh, I don't have enough money to pay my rent. And by a margin of over 20-1, it was about 85% of the users said it makes them more responsible, because now they can match their pay to when their bills are due, right? And that's when a lot of the mismanagement comes, because if you have a period where you don't have a bill due and you have a bunch of money, you may spend that irresponsibly, versus if you're able to now constantly, daily or hourly, track how much you're earning, and when your next rent or auto payment is due, you're just inherently a better budgeter by having access to the service and the information. And so 85% of folks said it made them more responsible, but only about 3.8% said it made them less responsible. And the remainder said, I'm not sure. So overwhelming majority of our users feel like this was actually a critical link to helping them do more responsible spending. And another thing you can think about on that is, if you're in a system like DailyPay where payday can be every day or whenever you need it, there's no longer this artificial kind of celebration every payday, because every day can be payday.
Yeah.
So we're doing ongoing research on this as well. But the idea that we can maybe potentially limit that splurge spending on payday from people and help them be more responsible with their money is another opportunity space here.
Yeah, I love that. When I went in the military, my dad always said, son, listen, these soldiers will blow all their money and then they run out. And then when it comes to payday, so they said, he taught me, I swear, this is my dad's financial guy. He taught me to loan the money at high interest. And I made a whole business of that when I was like in the military. But it's very, very true. And what I like about what you said is that matching up the money when they get the money with when their bills are due really could save them a lot on interest. If you think about credit cards and fees and things like that, that they no longer have to do because they can coordinate their payments with when those bills are due. I don't know if you guys have looked into that, but I would think it potentially could save them money from not having to pay interest and late fees, et cetera, on stuff that they were paying before this fixed that problem.
Yeah, you're absolutely right. And so, one thing we also did was explore kind of the financial component of that. And you're right. Life doesn't wait for the 15th or the 30th of the month, right? And so, we've done some estimates. It wasn't it was a shockingly kind of round number that we ended up getting, but it was like $99 and change. But it was about $100 a month we've estimated. This can save from our own user reports, not just doing kind of like research canvassing of like how much on average people spend. We asked our own users and said, how much per month were you spending on overdrafts for? I mean, one shocking statistic we uncovered was before having access to DailyPay, about 1 in 4 of our users were overdrafting twice or more a month.
Wow.
That's $70 a month alone in overdraft fees.
Yeah.
It doesn't even include late fees. It doesn't include credit card interest. It doesn't include a payday loan if you ever have to take them out. And for a lot of these critical frontline workers, who are helping keep our economy humming, they're still living paycheck to paycheck. And the idea that, they can be freed from having to regularly overdraft. Some people are like, my rent check's due on the 6th, I get paid on the 4th, I'll just bounce it every month because whatever, it's better than taking on a payday loan. And they just swallow that $35 or $70 every month. And to be able to, again, tell them, you can do this for $1.99 instead of $35. It just is, it's a substantial change.
Now, you mentioned regulation that states that people are supposed to get paid, supposed to get paid when the money's due to them. And I saw that something, I think, from the CFPB called Approved Earned Wage Access. Can you tell me more about that? Do you know what that is, the CFPB Approved Earned Wage Access?
Yeah, so earned wage access is another moniker for our industry. We prefer on-demand pay because it's really more about on-demand pay. But earned wage access is this general space of working with employers to make net earned pay available to you. And so this is a new technology, and there's been a lot of questions from our employer partners and the public of where does this fit in kind of the existing legal structure. And so the CFPB is the financial regulator from the federal government, and they weighed in late 2020 with 2 actions that were particularly relevant to our industry. Overall, just really positive to see what they wrote. Essentially, what they did was validate the type of approach that DailyPay has been taking, which is employer-based, limited to net pay, low fee structure. And so they issued guidance that essentially said, if you do it in certain ways, we agree that this is not a loan or a credit product. And that's been, something that's been kind of hanging over the industry for a couple of years where, no one has actually treated it as a loan or regulated it as a loan, but there's been questions of, is this going to, invoke or imply jurisdiction to some sort of financial laws. And so it was really gratifying to see, the CFPB not only say a lot of positive things about our industry, about how this is a lower cost alternative to predatory loans, et cetera, but to point out, again, not just broadly and generally, but specifically in a context very similar to the type of service we operate, which is when it's in the employer benefit context, limited to net pay with all these types of guardrails. It is a very beneficial service and not a credit product. So, we don't like to throw around the words approved or endorsed. Other market actors, kind of are making a bigger deal of this than they probably should have, saying that, they've now been approved by the government. But our view is that federal government has weighed into the space. They've said phenomenally positive things about the industry and said, specific positive regulatory things about the types of approaches that DailyPay takes to this.
What kind of tech do you guys make available to the employees to know what kind of funds are available to them at any given time?
What kind of data?
I mean, is there information? Is there an app that I can look at as an employee to see how much money is available, or is it the pay ATM access? Or how does that work?
Yeah, so what we do, like I said, is we plug into the employer's time clock system and the accounting system and the payroll system, and we have an app. It's called the DailyPay app. You can get it on the Apple App Store, the Android store, and the employer has to check a box on their side to say, yes, you work for me and you're an eligible employee. And once the app is set up for the employee, like I said, just like monitoring, I don't know what bank I have Bank of America. I look at my Bank of America, bank balance, frankly, almost every day, just because I'm that kind of person. Almost the exact type of same experience. You can pull up your DailyPay app and it tells you what your earned balance is for this pay cycle. You can just close the app after that and say, that's great to know. I'm going to keep that in mind when I have this $200 bill coming due in 2 days. Which frankly is actually a very common use case, right? So one thing we found when you talk about kind of usage is our users may on average access the service about once a week, which is in line with that kind of interpay period need, but they check the balance daily. So it's something that's very important for them to help them become better budgeters. It's also just personally gratifying, like I mentioned, to say, I showed up at work yesterday and, sometime a couple weeks from now, I'll get rewarded for that. But now, every day, like, man, like that time I put in, I earned $170. Like that is just like really gratifying on a personal basis. So there's this whole experience of people who just use the app and don't even ever or almost never engage in a financial transaction. And then other people who are in a situation where they have to live paycheck to paycheck and are regularly paying overdraft fees or contemplating payday loans, may need to use this, within that pay period. Let's say you get paid every 4 weeks, maybe you need to use it once or twice in between the pay period because this is just the way your finances are. But there's a whole category of people who use only the app, don't even engage in the financial part of actually moving of the money. And generally our users may access the app about once a week, but they access their balance to view it daily.
Wow. The other thing I think about is you mentioned Kroger, grocery store chain, up north. I don't know where they are, but I remember they were up north when I was in the military. Publix is big down here. So I'm thinking, if I'm an employee at Kroger and I have that, and then I'm going to think twice before quitting and going to work at Publix that doesn't have that. So what kind of statistics do you guys have on this reduction of turnover for an employer with this service? And then also, like, this has got to help retain employees, I would think.
Yeah, it's so we spent a lot of time focusing on what this means for the workers' bottom line and how it improves their life and their financial wellness. That's pretty much unquestioned at this point. The less talked about thing and kind of part of why this industry has been been on a rocket ship is there's serious employer benefits. Exactly on the head, but one of the major benefits is retention. So we serve a lot of industries, and as you probably know, some industries more than others have turnover problems, right? Like imagine quick service restaurants or fast food restaurants, your typical retail outlet. Some of these industries have turnover of 300% a year. That means people on average are turning over every 4 months. And that is very expensive in terms of having to find new candidates, having to hire them, having to train them. And then all of a sudden, 3-4 months later, they're all leaving again. Even moving that average tenure from 4 months to 6 months is meaningful bottom line. I mean, we're talking about millions of dollars for a company and billions of dollars countrywide if more employers started doing this. So employers are realizing, oh man, my average employee satisfaction and tenure substantially increases. Not to mention the fact that they're more motivated on their shifts. They're more motivated to pick up extra shifts because now you're not just doing a favor for the boss when they ask you to come in on a Saturday. You can be like, oh man, that's another $130 and I can either not do it or do it. And so that whole decision process has now been changed such that the way employees see their employer and interact with their employer is different. So employers are asking for this too, not just because it makes their employees happy, because it's good for their bottom line.
Hmm. What's some, I'm not necessarily needing case studies, but this has to be transformative. We talked about a lot of stuff here with how to help employers with retention, which is like one of the most costly things that we have of waste is losing employees. And we talked about customers, the employees, and what they're saving with not paying all these payday advance loans, all these other fees. But what have you really found transformative? Like, do you guys really have some transformative stories about what this has done for certain employers or their actual employees?
Yeah, I mean, I'll tell you, the way in which this changes people's lives is just something that we can never speak enough about. I mean, we get just organic testimonials coming in from our users on a daily and weekly basis. We don't go seek this feedback. They literally write into us and saying like, DailyPay has been here to catch me when I fall. It's been here to save my life. I used to have to go take out a payday loan. I used to have to go borrow money from my mother-in-law every other week. And so, one thing I always like to point people back to is we've talked through the math and the finances and how this really kind of, can save you $1,000 or more a year, that $100 a month or so, if you're able to take advantage of a service like this. But there's also the real human story behind all of this, and it really is life-saving for people. We have people write in and say, I don't get paid in time to be able to afford my copay for my medicine, so I use DailyPay to be able to get my medicine. And so it's just really transformative for people's lives, A. And then B, just you can look at the market, right? The fact that no one was even kind of talking or hearing about this 2 years ago, and Fortune 100 companies like Target and Kroger and others are rapidly implementing DailyPay. And these are some of the largest employers in the country. I mean, it's a very kind of like blue chip business now in terms of those types of moves from our corporate partners. So, I absolutely agree with you in terms of it being a transformative technology. And part of what you can point to in terms of the proof in the pudding of that is it kind of came out of nowhere and has become massive in just a couple of years.
This is powerful. I mean, I can tell you, I never heard anything like this before. And I know that I'll be getting it to our team. But Matt, as we get ready to wrap up, where can everybody go that's listening and watching to go to learn more?
Yeah, sure. Please feel free to check out dailypay.com if you're an employer who wants to take advantage of the service. We have a massive team that can handle everyone from a small and medium enterprise to a blue chip company. And then we also have our social you can follow. There's DailyPay on social, and then I also have DailyPay policy on Twitter. So we want people to, even if you don't want to become a DailyPay client, just understand how quickly the HR payroll landscape is changing, and you can learn from some of the things we've learned over the years. We have some nice blogs on payroll development and on-demand pay developments and things like that. So a lot of education materials that you can have access to. And we're very excited for the next few years here. We think we're kind of in the middle of this hockey stick growth where the big guys are jumping in. And so the first few have, and now the rest of the big guys are going to be jumping in. And you can see that in the competition amping up, and the space is just getting a ton of more attention, which means, what we like to say is real-time pay is here to stay.
Matt, thanks again for coming on with us today.
Thanks so much. Yeah, great to be here.
So I can tell you, watching this and listening, this is why I love podcasting, because I never have heard anything of this before in my life, never. And literally within minutes of Matt talking, I thought, that is freaking brilliant. And all these problems he discusses, this is what's going through my head, is all the money that people save on this, the ability to pay your bills, have more control over your money. I mean, what it does for your employee is fantastic. I mean, without a doubt, what's happening is when I go through my post-production process here, I'm sending this over to my HR and say, you need to see this and you need to go through it. I'm going to require her to go through this as soon as we're done, because this is something I think that I don't see any reason we wouldn't adopt for our own team. And this is what you should be thinking as well, because we've got this from both sides. First of all, this is a no-brainer for your employees. I mean, the benefit it provides them is outstanding. And I haven't heard any drawback. We even tried to look into some statistics that could be a negative and found out it's actually a positive. It helps people be more financially responsible to have this kind of access. But then as an employer, one of the biggest expenses and costs you'll ever have is turnover. It's retaining your customers. This gives you a huge advantage against your competition. Probably none of your competition is even doing this. So it gives you ability to be able to retain employees, make your employees more happier. And then at the same time, it really solves a major problem they're struggling with and shows that you're empathetic to those problems that they have. So go to dailypay.com and look into this. Man, they have a whole resources section with blogs. They've got case studies. There's so many things here that you can access with more details and information. And this is something you definitely should consider. Major upside, really no downside, really minimal, if any, cost. Hardly any. So this is something you need to look into. Make sure you go to dailypay.com to learn more and see how you can help your retention while really helping solve one of the biggest problems that your employees have. Thank you very much for tuning in. Make sure you go to dailypay.com.